Hello and a very warm welcome. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. We'll begin with markets as usual. To my left is my colleague Suyash. Maheshwari. Suyash, markets ending in deep red this afternoon?
Yeah, so after a muted opening, Indian markets continue to remain in the negative territory for the majority of the session. And Nifty attempted to bounce back towards the 19,550 levels, but it could not sustain above that. As a result, the market corrected about 0.5% in today's trade. Sensex was down about 0.48% and managed to close just above the 65,512 levels, whereas Nifty, it dipped below the 19,500 levels for some time, but it managed to scale back those levels and close above it. And the Nifty 50 closed at 19,528 mark. Now the broader markets, Shweta, have continued to remain buoyant. They have outperformed markets, for the I don't remember how many months.
Far
too long. So they continue to outperform markets. The mid cap index was up about 0.18% or so at close, whereas the small cap index continued to post strong gains and it was up about 0.5% in today's trade. Now talking about sectors that were in focus, Shweta, the FMCG pack, which was the only gainer in the morning trade, also slipped into the red. It corrected by about 0.55%. Also, apart from PSU banks and the media pack, most sectoral indices on the NSE, logged losses. And as we like to call it, was a sea of red once again for the market. Now, the biggest loser today was Nifty Auto. Nifty Auto corrected by about 1.2%. The sector has seen a fair bit of run up since the start of financial year 2024, but the September numbers came out, and although it did show some sort of a growth, it failed to impress the streets, and as a result we saw across the board correction in both two-wheelers as well as passenger vehicle stocks. Apart from that, the pharma index was down about 0.92% or so. The index was the best gainer on Friday, so perhaps you are seeing some profit booking taking place. Now, one of the outliers, Shweta, in today's session was Nifty PSU Bank. Now, Nifty PSU Bank was down 0.5%, and there were talks about the rallies perhaps dying down and time to look at the private banks probably, but it seems that the bull run is on, and it's on in a tremendous fashion. The PSU index was up 2.38%. The media pack gained about 1%. Now the banking sector, Shweta, which was expected to see some sort of a recovery heading into this week, continued to remain under pressure, although it did take support at the 4,200 level, and it managed to close just below the 44,400 mark. That was pretty much how the sectors were in today's trade.
Okay, let's quickly get in Avinash Gorakshakar, who's the Director of Research at Profitmart Securities, joining us here this afternoon. Avinash, thanks very much. I appreciate you taking time out. I think I have lots of questions for you, of course, on the back of lots of cues that are to come later this week. But let me first begin by asking, what's leading to this consolidation in the Indian markets? Are we anticipating that RBI MPC will not perhaps be in line with streets, what they are estimating? Is that why the jitters are, or are we still seeing essentially global cues playing up in Indian markets?
Yeah, I think good afternoon, Shweta. I think see, the markets are going to remain volatile largely because the rupee is getting weaker, the dollar is appreciating, and FI flows are on the negative side. If you observe the flows for the last 2 weeks, we have been seeing that FIs have been continuously sellers in Indian markets, although the domestic funds have been buying off late. My sense is that the liquidity from the FIs on the sell side is getting more and more bigger, and more importantly, overall, I think both domestically as well as globally, inflation concerns have not actually watered down. There are possibilities that Fed could possibly look at another interest rate hike. As far as the RBI governor is concerned, I think the commentary from the RBI governor is going to be very important, and I think there's been a lot of profit booking. So I think it's just a matter of time when we see the Q2 numbers flowing in from the first or second week of October. And I think again the market should again get back to stock specific activity. So on a broader index level, I don't think 19,500 would be broken. But yes, I think unless we get some good FI flows in the near term, the markets are going to remain pretty lackluster and possibly struggle, at the way they are doing as of now.
All right. And before I let Suyash come in, rising dollar index, a weakening rupee that's going to weigh in on the markets, as well as the upcoming, MPC. All eyes, of course, on the RBI governor's commentary. But how long are they going to play a spoil sport? Do you think it's going to be a correction in the markets? Do you think the markets are going to pick up maybe by the end of this week? Is that the timeline you're giving? What's your long-term outlook?
No, I think, see, the markets have run up also very sharp in a very short period of time. So I think some excesses are being cleaned out in the market. And I think clearly, the markets are now looking at consolidating at the current odd levels. I would not be surprised that maybe, rather than the broader index, the broader market is going to offer a lot of opportunity, from sectors like auto components, capital goods, real estate, cement, where I think we will be seeing very strong earnings numbers coming out. So I think the broader market will continue to do well. The index is going to remain in a very narrow zone, and 19,500, for the Nifty is the near-term support level. I think if that is not broken, you could see a sharp bounce back also, depending on how the corporate quarter 2 result season pans out. If it is much better than the street expectations, then I think you could see a very good bounce on the broader index level also.
Now, to Avinash's point, it makes a lot of sense that FIIs are not really buying into Indian equities.
I mean, US bonds are at an all-time high.
US bonds are at an all-time high, and I think for the benefit of the viewers, we also should expand on it. When US bonds are trading, hovering around that 4.6% mark, it does not make sense for foreign investors to leave that safe haven, comfort zone,
and
come and invest in emerging markets, because
absolutely,
the yields are high. At the same time, the dollar index is rising. That means that the rupee is falling. So whatever little extra return that they make gets eroded from the currency depreciation. So perhaps we may see FIIs selling continuing. And Avinash, to that point, I mean, do you expect that they are perhaps waiting for the November policy meet to roll around, to get some clarity about this higher for longer rate narrative?
I mean, just to add to that, FIIs being net sellers is been widely discussed on this show. We've spoken to various analysts, and they are of the opinion that perhaps FIIs are missing out on a jubilant markets in India. That doesn't seem to be the case anytime now, in the past 1 week at least, where volatility has been very high. Do you see FII interest building up towards the end of this month?
Yeah, I think FIs would continue to invest only when they see some correction in the dollar index, and obviously when the rupee starts stabilizing. And I think the next 6 months, for Indian equity markets is going to be extremely volatile, because we're going to head it into election season. Already state elections in MP, Rajasthan are scheduled for November and December, and then we have the general elections. So I think market volatility will now increase. So, my sense is till that time, FIs are going to be a little cautious. And with US bond yields at record high levels, I think they don't have a very near-term incentive to invest in the Indian market. So they won't ignore Indian markets altogether. But as I said, the timing of the entry of their markets would depend, on all these macro factors. So I think it may be a couple of months before, the real buying from FIs start, and then we could see a kind of a noticeable trend. But till that time, I think you'd continue to see this FI selling, coming in the Indian equity markets.
Now, Avinash, as you said, volatility is expected to continue in the near term, given that various global factors that we just stated. Now, October traditionally or historically has been a good month for the markets, for both domestic as well as global markets. But given the high volatility that we are seeing, what do you expect first will happen? Like, will Nifty go back to 19,000, or will we make a dash once again to that 20,000 levels?
No, I think my guess is 19,500 looks a pretty strong support. And I think, as I mentioned to you earlier, Suyash, that if 19,500 level is maintained, then I think you could possibly see good amount of levels on the upside, maybe 19,700, 19,800 initially before we touch that 20,000 number. But it all depends on how corporate season quarter 2 pans out. If they are much better than what the street expects, and some better management commentaries coming out post the Q2 numbers, then the markets would be a little more confident on re-rating particular stocks. And I think in this rally, you got to understand the banking stocks have got to participate in a big way. We have seen banks underperforming in a very big way. Stocks like HDFC Bank, ICICI Bank. These are the stocks which have actually made the market pretty sluggish and have brought the index to lower levels. So even today, if you see, HDFC Bank was a big loser. And I think that has been one of the key reasons the index has been struggling.
Now, Avinash, as you rightly pointed out, banking index has not been, the Nifty banking index has not participated in the rally, and in fact, Shweta, it was only one of the only sectors that did not scale record highs in Nifty's 1000 point run up, where it scaled the record highs of 20,200. But Avinash, then again, we are seeing this rally play out in PSU banks, which is not looking to take a breather anytime soon. Whenever we start discussing, oh, perhaps it's time to shift the focus from PSU to private banks, because the discrepancy in the rally that we have seen. But it seems to be a one-way train. What's your opinion over here?
What's working
So
for
I think,
PSU banks?
no, I think my guess is I think people obviously look at PSU banks, consider the bank that they were always available at a discount to the private sector banks. But I think considering the kind of performances put up by larger banks like SBI, Canara Bank, Bank of Baroda, I think one thing is very clear that asset quality issues are a past are a legacy now. And I think the most of the banks are operating at near to very strong kind of asset quality levels. The credit growth in the system is also very strong in double digits, and I think that is going to help all these larger banks expand their balance sheets and tap both into the corporate demand as well as the retail demand. So my sense is that valuations wise, that is the key reason why PSU banks and specifically the smaller banks like a Bank of Maharashtra or typically a Indian bank or typically something like a most smaller banks are really doing much better than the larger banks. The base is also small and the performances are much better than expectation. In contrast, if you look at HDFC Bank or if you look at Axis Bank, ICICI Bank, the base value has also gone up. In fact, in HDFC Bank, they had an analyst meet where they clearly said that the provisioning for the HDFC portfolio is going to be significant. So quarter two is not going to be great at all. In fact, markets are now worried that probably the first year of the merger, post merger, is going to be a very challenging year for HDFC Bank. So I think PSU banks would continue to remain a flavor, and as long as there is no OFS or there is no dilution, these banks would continue to get re-rated.
Also, I want to get your opinion on the metal pack. Now, the metal pack, as we know, when the dollar index surges, it does not bode well for the metal, the commodities, given that there's an inverse relationship there, and most of these commodities are traded in the US dollar. So, whenever there is a spike in the dollar index, it perhaps makes the commodities more expensive for others. So, what's your outlook on the metal pack per se?
No, I think metals are going to be soft and underperform at least for the next 1 to 2 quarters. In fact, prices of other commodities like silver, for example, copper, we've seen drastic falls in these commodity, these metals also. So I think my guess is that the September quarter is also going to be a relatively weak quarter for most of the metal companies. Apart from the fact that domestic demand is good, the global demand still continues to be shaky. Global prices have not moved up. So I think you're going to see a softer quarter for most of the metal companies in quarter two, and hopefully only if China re-enters the market and we see a very firming up of global prices, only then there could be some sort of re-rating for these companies. Till then, I think it's going to be a kind of a market performer kind of movement for most of these companies. So I don't think these companies have got any chance of getting re-rated at least in the very near term. Yes, valuations have become attractive, but I think the growth momentum is definitely lacking.
All right, and since we're talking about metal, JSW stock has been in news.
Yes, so JSW Infra, finally got listed today. It got listed on a timeline of T+3. The markets have moved to a newer timeline. It's not mandatory yet. This ruling comes in effect from December onwards. But JSW Infra chose to get listed, within a T+3 timeline. Now the stock listed at a premium of about 20%. Now the upper band of its IPO price was 119. So with a 20% premium, the stock got listed at about 143 rupees on both NSE and BSE. Whereas throughout the day we also saw some buying action in JSW Infra, and the stock made an intraday high of about 157.3, which is a premium of 32% from the upper band of its IPO price, and the stock even closed over there. So Avinash, I mean, given that the stock has run up about 30%, more than 30% in fact, there were talks that the valuation wise the IPO seems well priced. After the today's run up, is it still a buy for you?
No, I think my guess is if you have a 2 year view, then I think you can probably look at it because in the very near term, a premium of 20-25% on the IPO price is a very reasonable kind of, expectation which the market had got. And there was no doubt that, this is a company which has got a great business, a very strong asset, and very difficult for any new player to get into this business. So I think over the next, say, couple of years, hopefully, numbers get better. Definitely, I think the markets would, obviously re-rate this stock, going further. So I think as of now, it seems to be quite well positioned. If somebody has a 2 year view, then I think definitely one can accumulate on every decline.
Now, for investors who are not allotted the shares of JSW Infra, is this the right time to enter the stock, or perhaps they should wait for some profit booking?
I think around 130 to 135, Suyash, I think would be a good entry point. I think, this stock has definitely got a premium in the sense that the group is very well managed. Most importantly, the business is very lucrative. It has a very strong competitive modes, not much competition expected in this space. So 130, 135 could be a good entry point for somebody who's looking to add, in the portfolio for a couple of years.
All right, so 130 to 135, that's the price band that Avinash is tracking. But Vidanta is another story that we are tracking, another stock story and story of a conglomerate that is now looking to separate its businesses.
Yes, Shweta. So the stock has seen a fair bit of run up. In fact, in the last 2 days, the stock has rallied about 11% or so. Now, I mean, in today's market, 11% of so rise does not mean much. But now we have to look that Vedanta stock was trading at a 14-month low before that. It has been a big value destructor for its investors. The stock is down about 26-27% on a year-to-date basis. Now, Avinash, first question, how do you see this demerger, like playing out for the company? Because the biggest question that remains for the company is that big debt number of about 6.4 billion. Is it going to solve that problem for the company?
No, I think Suyash, you rightly pointed out that this was the last option for the management because I think now they've run out of almost every option, and I think the reason for the demerger is obviously to ensure that the debt gets distributed across all the six companies, and there's a big debt repayment coming up of almost $3.5 billion by FY25. The management would have a very big problem if the entity would have continued to remain in the old consolidated entity because cash flows would not be sufficient enough to service the debt. And one more thing which investors should understand is that once these six companies come into operation, the old yardstick of the promoter giving handsome dividend payouts also is unlikely to happen. So I think going forward, markets are obviously going to look at how each of these companies present themselves because, this demerger process is going to take about 12 to 15 months to get operationalized. But I think net, the aluminum and the power business looks attractive. Focused companies by themselves are liked by the market. They get a better valuation. So I think in net, it's good for shareholders because it's a mirror image. They get one share each in all these companies. But I think one would have imagined that even the Hindustan Zinc share would have also been offered to shareholders. Unfortunately, it's been clubbed as a part of the holding company. And where value is not going to multiply, normally holding companies get a discount of at least 40-50% of their investment value.
Now, there are also talks that perhaps this demerger exercise was taken place so, Vedanta could offload some of its assets. Are you hearing or you picking up some chatter about that?
Yeah, definitely. In fact, Suyash, I think the iron ore and the steel business are prime candidates. And I think you should not be surprised that once this demerger process is complete, you could possibly, get some news flow from the management, hopefully that the iron ore and steel business could be hived off because these are prized assets. They could get a decent premium and the management requires a lot of cash and a lot of funds to actually service the, ongoing debt issue. So I think possibly these could be possibilities where the markets are also keenly awaiting any value unlocking opportunities. It depends on what kind of value these businesses get.
Now, I mean, one final question on Vedanta. In your mind, is it a buy given that this demerger is going to take place? The stock has run up significantly. Can you call it a turn around for the company?
No, I think Suyash, my guess is, let the water settle down. I think a 10 to 11% upside is not something which would excite me. More importantly, the September quarter, which is going to come as a consolidated kind of business quarter, is unlikely to be great. I think you could see margins getting squeezed, profitability dipping in this quarter. And more importantly, I think the markets would still await little more clarity. This demerger process has to be approved by the institutional investors, by the creditors. So I think all these things need to happen. So till that time, I think it's going to be a wait and watch for me as far as Vedanta is concerned.
All right, wait and watch on Vedanta, but there are other stocks that we are tracking, Suyash?
Yes, so Shweta, let's start with the losers today. Now, among the losers, the top laggard in today's session was ONGC. It fell about 4% or thereabouts. Now, this was on the back of a decline in crude price. As we know, crude prices over the couple of days has corrected by about 2%. From 97 odd levels to about 90 levels now. Now, ONGC being an upstream company, which means that it is in the business of exploration and mining of oil. So it's bad for them because the output that they are getting will be sold for less. So ONGC perhaps saw some correction because of that. Eicher was another stock that was down about over 2.5%. Now this was on the back of a decline in sales. Now Eicher Motor reported a 4% decline in the sales for the month of September. The number that is concerning for me is a 49% decline in its international business, and also the fact that other its competitors TVS and Hero MotoCorp actually beat estimates. So I mean, I think the market is also taking cognizance of that, and as a result we saw a correction of about 2.68% in Eicher stock. Maruti was another stock which declined about 2% today. Now this was on the back of a tepid growth in September sales. I think the Maruti's September sales grew by about 3% or so on a year-on-year basis. Although the company did clock that 1 million mark in the first half for the very first time. So, but it failed to impress the street, and the stock was down about 2.67% at close. Other losers were Hindalco, which fell about 2.5%. The stock has seen a fair bit of run up, perhaps some profit booking taking there. Dr. Reddy's is another stock which was actually among the top gainers on Friday's session. So perhaps some profit booking there. Absolutely. It was down about 2.31%. Among gainers, Shweta, was Bajaj Finance. Now Bajaj Finance stock ran up about 2%. Now Bajaj Finance board is going to meet on October 5th to decide about how much funds that they are going to raise. The expectation of the street is that Bajaj Finance could raise as much as $1 billion. So ahead of that big fundraising, mega fundraising plan, Bajaj Finance, which has also been running for some time, also saw a gain of about 2%. Now L&T was another stock which touched a new 52-week high today. Now it has landed a construction, its construction arm has landed a contract to build 4.5 kilometers bridge between Dahisar and Bhayandar in Mumbai. Now, excuse my pronunciation. Adani Ports was another stock that was rallying today. It was up about 0.8% or so. Now, the first half of FY24, the cargo volumes grew to a lifetime high of about 202.6 million metric ton. So that was the reason. Other gainers were Titan and Bajaj Finserv, both rallied about 1.3%.
All right, Avinash, any of those stocks stand out for you in terms of what stories they will write in near term?
I think L&T seems to be quite interesting, considering the fact that it's won orders worth almost 7,000 odd crores, and I think execution is going to be pretty strong in the September quarter. Also, they had a very successful buyback where the acceptance was almost 100 odd %. My guess is L&T could show pretty strong numbers with the kind of execution and with the kind of new order book clocked in. We could see better kind of numbers post September also, and I think L&T definitely looks pretty interesting. A little under 3,000 odd rupees. We have been telling our clients to accumulate this stock for a price target of around 3,400. As far as Eicher Motors is concerned, I think it's a matter of concern that numbers have been negative vis-a-vis other players in the same industry have shown positive growth. So I think the markets were concerned that some amount of competition has started biting into Eicher's product range. So I think we'll have to wait for another couple of quarters before we see the impact of new competition and new products which have dented to a large extent Eicher Motors market share, especially in the two-wheeler market shares in the premium bike segment.
All right, so a little bit concerning there as far as iShares is concerned, but numbers overall hopefully will pick up in days and months to come. Avinash, thank you so much for taking time out. Appreciate you joining us this afternoon. To you too, Suyash, thank you for the markets lowdown.